index. Now, I'm not doing anything the rest of the week, but we have a small little volume imbalance in here, right there. And then below that, we have this down close candle, which is a bullish order block. If we trade down to that level, I would like to see dollar index fail to go any lower than this candle's open at 96.14. Let's call it 96.15, 96.20 in that area. So if we lose 96.20, 96.15, we're probably going to make an attempt to get down here to this low. And that would support the bearish seasonal tendency going into May. Do I see it here? It could do it. It could. But I don't have that strong conviction to say, okay, let's focus here. Because we've been back and forth whipsawed. Directional bias has been changing each week. I'm finding setups, but again, it's only on a scalping and intraday basis. But for like one shot, one kill, I'm not finding that. Okay, like for instance, like trading the weekly range, I'm having difficulties doing that personally. So that's why I'm doing all these Jack be nimble, Jack be quick, jumping over the candlesticks intraday. So if we go down to this low here, I'd like to see it support that. If it goes through that, again, that's the level I'd be expecting to see liquidity ran out on. We'd have to go above these highs in here in a meaningful manner to see any attempt to get above these equal highs and run for that weekly inefficiency that we've mentioned in the past. Gun to my head, we're going sideways on the dollar. Euro dollar. All right, so this thing has, it may want to come up here and challenge this bearish order block. Might want to do that. I don't like the overall market structure that's here. I suspect that it still wants to get into those 110s. And I'm right now looking at the market has dipped lower, 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 and then we tried to go lower. From an interest rate differential, there's really no reason to buy euro dollar. There's really no draw on liquidity that would be meaningful for euro. There's no fundamental strengths in the idea of buying the euro. There's simply no real interest in buying this currency pair. So I think if we get some kind of a wild snap higher, okay, maybe they'll do one more attempt to run out the highs here or run above this short-term high here and then ultimately fade that and go lower. I think we'll see 110s in 2019. I see that in the cards for euro dollar, but trading it in here, it's been rather fickle. And it wasn't until we saw the ECB come out today that we saw real pure technicals. So volatility's there when it's needed, okay, but it's being really, really stingy with it otherwise. If we go into an hourly chart, you can see that this is the move we took part of today, but it only came right down into a bullish order block right here on the hourly. So I'm just going to use a horizontal line here. Drop that on there. So we have a bullish order block here, led to this run up, dropped all the way down into that. So what level is that? 112.30. That was the reason why I had my limit orders there on Twitter. You see the recordings. The last limit I had was a little too ambitious, and the spread wouldn't let me cover. So I had to cover at market. So let's drop into a 15-minute time frame. You see the high here and the high here. They were relative equal highs to me. Now, this is something for your notes. This is really important to know that I'm not in here trying to trade ahead of ECB rate announcements. I'm not in here trying to trade ahead of FOMC. But I am willing to step in after the initial run created by these events. Not so much with FOMC because it's so late in the day, but for rate announcements, it's during what time of the day? It's usually during a New York kill zone, or it's during a time of day where it permits more participation, and it has a little bit of battery left in the daily range. So on ECB, we opened up here on this candle. Let me drop down into a 5-minute chart because you can appreciate a little bit more. So we have relative equal highs here on a lower time frame, and I wanted to see it make an attempt to go higher and then fade. And that's what we saw happening. We opened on this candle, dropped down. So if we look back into this area here, on a 1 minute chart, that's what I used. If we drop into a 1 minute, it feels kind of strange talking about a 1 minute. Michael, what are you doing talking about a 1 minute chart? Let me scrub back here. There we are. So right in here, we have a breaker. This move led to the run up. So they ran all the stops here, and then the market broke down. All I did was went in right after the initial knee-jerk reaction, and I wanted to get in close proximity to that breaker. Okay, and then the other orders were optimal trade entry into a bearish order block and a fair value gap. Another optimal trade entry, mean threshold of the bearish order block, and just stop entries below here. If I see it break down lower, and right in here, I just did another stop order. So I don't want to be babysitting the positions, because I think if it's going to go all the way down the order block, anywhere in here, once it starts to run because of the time of the day, it's going to do so in quick fashion. Okay, so for your notes, just know that if this price action was to form during a medium impact event, okay, on the calendar, or anything non-farm payroll, FOMC, or rate announcement, I'm going to wait. Okay, I'm going to wait to see what they run first. And then once it shows its hand to me, like it does here, it opens. It's just it's a stop run, and they start to break down. I can trust that they did this on a high. Now, if it's a medium impact event, okay, if it's not a rate announcement, if it's not FOMC, if it's not non-farm payroll, then I will sell it as it runs up there like that. That's when I'll sell it above and go right into that and stand right in front of it. But anything like a rate announcement, I want to see them tip their hand, because I know I'm going to use the breaker to get in there. I don't need to worry about it. And if the market was to run away and not give me that breaker, okay, fine. I'm just going to get something down here when I get the first retracement, because I know what the draw on liquidity is going to be. It's going to be that hourly bearish order block. Remember, the focus going into this week, all I cared about was going short. I waited for my setup. What was the context of this week? ECB was coming out, FOMC. That was the fireworks for the week. So Monday and Tuesday, we had to sit through lethargic, mundane, boring price action, doing hardly anything in Eurodollar, until we had the show. So once that volatility came in, it's easy pickings then. I ain't got to worry about it. Down here, that order block, you can see beautiful, beautiful delivery of price. Now, I'm eating my heart out. Don't get me wrong. I wanted to buy this order block right there. When it came down in here, I wanted to buy that for a London close entry and try to get back up into the stops here. That would have been a nice run from this exit to an entry down in here. But it would have gone against what I tried to teach this week, which was focus on one side of the marketplace. And if you don't get your fill, guess what? You don't get your fill. If you don't get your trade, you don't get your setup, then you don't get it. We could have went this whole week and maybe nothing would have transpired. And it would have been a failure? No, it would have been a really great learning experience, because you would have seen me stay on one side of the marketplace, look for a setup, and it didn't come. But just so happens that we knew that Wednesday was the fireworks display for volatility for this week. We knew it was going to be Eurodollar central because of the economic calendar. We knew what time it was going to occur. Okay, so I sent a tweet out today, and I actually kind of like it. I don't know where I get some of this stuff. It comes off the cuff, but I gave an analogy about it. The economic calendar is like a movie script. Okay, and the kill zone is the scene or the act in the play. Okay, and when we get into a kill zone, a time of day, that's when you need to know your lines. Now, it was a pun because you need to know your lines or your levels in the price, but you also need to know what your lines are. What are you supposed to be doing? What are you supposed to be saying as a trader relative to what you see in price? Am I buying or am I selling? Okay, so I felt that was kind of noteworthy. I like that one. So I put that in my journal myself today. I thought it was rather neat of an analogy that came off the top of my head, but it's really important that you understand that's how this works, because the economic calendar, there's no reason to consider looking at it unless you understand that that's when the volatility injections are going to occur. And if you understand the context of the market and the weekly range environment, you can still be wrong and still find setups. Perfect example this week. I was looking for a bullish dollar. We didn't see any bullishness on the dollar index except for intraday movement today. And if we look at that, let's drop back over here. I know I'm all over the place today, but I just want to, I have so much work ahead of me tomorrow. I just want to be real relaxed and just go through it the way I want to go through it tonight. But this movement right here, this is all that was needed. That little pop up in here to justify shorts going into the ECB. That's it. That little run right there, that teeter-totter, that seesaw type effect, one thing goes down, other things go up. Well, dollar going up here allows for foreign currency to drop. Okay, no problem. That's what we see here. So I had my setup. I knew what I was looking for. I wanted to sell short. What was I waiting for? I was waiting for the fireworks, the volatility to inject movement or displacement in price. They popped it up here. Notice the openness up here. They sent price up here rapidly, really quick. That's not random. Come on, that's not random. That's designed. So when they open it there, everything floods the market for buy side. All these buy stops have been hit. The market's flooded with buy orders. Traders at the bank level and large institutions will have liquidity to pair up with selling short, all the way down to a clear, obvious 60-minute bullish order block. Beautiful delivery. Came all the way back. And right now we're just chopping sideways here. And it's just a total mess. Well, of course, it's a 1-minute chart during Asia, so who cares? If we go back out to a daily and zoom back in, I want to watch this level here, this low at 112. We'll call it 112.90 because if it's going to go up, it could reach to 112.90, but we'll call 112.85. Today's high is 86, I think. Yeah, the 112.86 and a half. So I want to see, are we able to crack through this right here, or are we just going to slowly drift and go sideways some more? I don't personally know. It would bother me to say, I don't know, if you hadn't been seeing a long track record of me being able to tell you what is going to happen before it happens when the environments are better than we are right now. Admittedly, this is a very, very, very hard market right now. So if you're struggling, just find some solace in the fact that I'm working my ass off here too. So it's not that it's coming off easy. It's not. I got to work. I got to really find these setups and wait just as well as you do. But it doesn't stay like this. A couple of years ago, we had volatility contract like this as well. And it became like big news. Everybody was talking, oh, volatility is gone. There's no liquidity. There's this and that. There's plenty of liquidity. There's lots of liquidity.